Hi guys, Ben here. Let's talk China. Some people call China a sleeping giant. I call China a giant which is very much awake. They have the world's largest population of over 1.42 billion people, a growing middle class, one of the world's largest and fastest growing economies, and ironically, they are one of the least affected countries by this whole global health crisis. Now, Chinese stocks have recently been going for a major crisis, and Alibaba, one of the largest e-commerce players and tech giant, has been hit with an antitrust investigation. Now, the idea behind an antitrust investigation is they believe Alibaba is conducting in monopoly-like practices. But that's not the only trouble Alibaba is having. A spin-off from the company has been hit with major allegations. That's Ant Financial. And Alibaba actually owns around 33% of Ant Financial. Personally, Ant Financial is a company I would not touch with a barge pole. But what about the other Chinese stocks? Are they all bad? Well, I don't think so, and actually think China presents some of the greatest opportunities right now. After all, the traditional Chinese word for crisis has two parts. The first part means danger, and the second part means opportunity. And I think this could be a major opportunity right now. All in all, Alibaba has dropped from its highs by over 33%, and I personally think that is an overreaction. So in this video, I'm going to deep dive into two major Chinese stocks which could be great buying opportunities right now. I'm going to dive into the fundamentals using the Stock Card platform, which is a sponsor of this channel, and then I'm going to dive into the buy points and the technical analysis, because after all, who wants to catch a falling knife? So for those of you who haven't subscribed yet, why not join the investing family by hitting that subscribe button and turning that notification bell on. And if you want to take things a step further, hit that first link in the description below to be taken to the Patreon page where you can check out the VIP membership group. As a member of the VIP membership, you get access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire investment portfolio. For example, in this situation right here, I informed the VIP members last week, but only this week have I managed to get the camera equipment together in order to make a video for you guys. So you guys will get the early alerts and the inside scoop on all the opportunities as early as possible, exactly when I'm making my moves. So if you're interested in that, first link in the description below. With that being said, let's dive in. Now, for those of you which don't know, Alibaba is an e-commerce giant in China, founded by the legendary Jack Ma. So apart from Alibaba.com, which is a global e-commerce platform, Alibaba also owns Alipay, which is extremely popular in China. They own Taobao, which is a customer-to-customer marketplace. They own Tmall, which is a business-to-customer marketplace, a little bit like Amazon. And they even own AliExpress, which is an e-commerce marketplace for consumers. But that's not all. One of the most exciting business models of Alibaba is Alibaba Cloud, which is its cloud services. Many call Alibaba the Chinese version of Amazon, and you can see why. There are many similar businesses, and they also have this cloud segment, which in the company Amazon is one of the highest revenue producers for the business. So here we are on Stock Card. We can see the company's got high growth potential, strong operations, and it's classed as an undervalued stock right now. My intuition was right. So the quarterly year-on-year growth, we saw a 32% growth rate. In the 3-year compound annual growth rate, we've seen a 46% growth rate. Now, to put that into perspective for you guys, generally I consider a growth stock one which is growing between 15 and 20% per year on their revenues. This company is growing between 25 and 30% per year, which is incredible. But what makes this even more incredible is the market cap of Alibaba, which is over $600 billion. So this is a giant company which is growing fast. Does that remind you of any other companies? Now, the company is also profitable, so they had a earnings per share $1.43 positive, and the last 12 months earnings per share also positive. What about that balance sheet? Well, the current ratio is currently 1.06, so that's your short-term assets to your short-term debt. So the company has just enough short-term cash to cover its short-term liabilities. And with an incredibly high 12 months free cash flow, this company has no problem with covering any long-term debt. The company has a price to sales ratio of around 14, so you're paying 14 times the company's sales, which isn't cheap, but given the company's high growth, definitely makes this a fairly valued stock at these levels. So what are the buy points? Well, here we are now on the technicals. I've outlined the buy points here. Now, this was done a few days ago, but it's still fairly relevant. Now, for those of you who don't understand technicals and charts, I'll just talk you through it real quick so you've got a brief idea of what's going on. This blue line is a moving average. Each of these red and green bars are what called candlesticks. So the greens represent a buy, reds represent a sell, to keep it really, really simple for you guys. I've also got a MACD down here. So when basically they cross over, that means that could be an opportunity to buy, as the stock has reached the support at the bottom and now it's ready to shoot back up. Now, in terms of the support lines, because that's the important part that we need to understand, I've put here what's called a Fibonacci retracement, which basically mathematically traces potential buy points. Now, charts are not an exact science. That must be put out there. Technical charts are not an exact science, but they can help to give you an indication of when's a good point to buy. So here's one that I made earlier. And as you can see here, buy point 1, I put 225. And as you can see, I was pretty spot on. So it hit that point around 220, 225. And then it bounced back up. Now we're at 236 today. As I mentioned, the VIPs did get this news earlier, and I've only just managed to get it out to you guys. But still, the value at these levels is still quite good. Bear in mind, these videos are not financial advice, so please do your own investing research before investing into any stock, especially Chinese stocks. If you're worried about investing into Chinese stocks due to the risk, due to the volatility, due to the political issues, then my suggestion would be to make sure Chinese stocks only make up a small percent of your portfolio. Let's say 10% of your portfolio. So let's say they do have major problems and major volatility, then you won't be worried too much because it's only 10% of your portfolio. As you can see here, so that's your first buy point. We're also below the moving average. So generally stock prices tend to do what's called reversion to the mean. So if they shoot above the moving average, they tend to come down and revert back to it. And if they go below the moving average, they tend to increase and reach it again. So as you can see, it's still slightly under the moving average here. I did another buy point at $200 per share if it broke through that point. Fortunately enough, it did not reach that point, which is great for if you already own Alibaba, but of course you could get a better price at $200 per share. But still, at these levels, it's not too bad. Now, onto stock number 2, and that is Tencent. So Tencent is one of the largest technology conglomerates in China. Now, some call this the Chinese Facebook, but there's so much more to this company. So just looking at this graph here, we can see in social networking, they've got QQ, WeChat, which is a bit like WhatsApp or Facebook Messenger. They've got apps which are similar to Facebook and Instagram. They've also got entertainment, QQ Video, which is similar to YouTube. They've got streaming platforms which are similar to Netflix. They've got information services, software and tools, and even apps similar to Amazon, Expedia, Uber, and many, many more. So you're not just investing into one company with Tencent, you're investing into a whole range of technology companies. But there's also something really special which I love about Tencent. So let's say you've always wanted to invest into Tesla, and let's say you missed the Tesla big bull run, and then you're still thinking, Tesla's looking a bit high right now. Another way to play Tesla, if you're really a bull on Tesla, is to invest into Tencent, because Tencent was actually an early investor into Tesla, and they actually own around 5% stake in Tesla. So when you invest in Tencent, you're actually investing into 5% of Tesla also. But that's not all. Tencent also owns a major stake in NIO. So if you missed out on NIO, or you don't want to invest into NIO as you think it's a bit too volatile, then you can invest into Tencent, and Tencent owns a large stake in NIO. So Tencent owns around 15% of NIO, which is massive considering the major run-up. Okay, so let's dive into some fundamentals for Tencent. We're here back on stock card. The company's got fair growth potential, stable operations, outperform the market. It says it's overvalued. So this stock did not drop as much as Alibaba, and was only really hit because Alibaba was facing this antitrust investigation, and because Tencent is in a similar industry, they're also a giant technology company, that their share price also fell. Now, there's an old saying in the stock market that a rising tide lifts all boats, but I consider a falling tide can also lower all boats. So if one of the major players in an industry does get hit by some bad news, generally that puts a black mark on many other players in the industry, and that can equal opportunity, because when there's volatility, there can be major opportunity. Revenue quarterly year-over-year growth, 24% growth for a giant company like this. 3-year compound annual growth rate, 33%. And remember, Tesla's had major growth, NIO's had major growth, and Tencent owns substantial stakes in both those companies.
Stocks only go up.
The company's also profitable with a $1.43 positive earnings per share and a substantial amount of 12 months free cash flow, which is also positive. So what about the balance sheet? Well, the current ratio is a 1.06. so it means it has plenty of cash to cover its short-term debts. I'm also not too worried about the current ratio because it has such strong positive cash flow. Now, the price of sales for the company is 11, so you're paying 11 times the company's sales, which is still fairly high, but still it is a fantastic company with major growth. So what about the charts? Well, diving into the charts here, we can see the stock price is still below the moving average, which is nice to see. And I did put a buy point here. First buy point was at $65 per share. Second buy point was at $60 per share. It did drop to around $60 odd per share, $65 per share. So that was the first buy point which was activated a few days ago. Second buy point here, $60 per share. Okay, so that's the stocks, that's the fundamentals, and that's the buy point. Now let's talk about the risks. So I know many of you guys are going to comment below and going to say, Ben, Chinese stocks are so volatile and so crazy. And yes, they are. So that is a major risk when you're investing into companies like this. One such risk is the fact that Tencent is on the OTC stock exchange, which is the over-the-counter stock exchange. Now, this is usually a smaller stock exchange, which is used for, let's say, penny stocks or more risky, volatile stocks. For some reason, Tencent is on the OTC. So that is a little bit of a red flag. But this company is a major giant. ARK Invest also increased their stake in Tencent and Alibaba when the stock market crash happened. And I personally believe, but this is just my personal opinion, this is not financial advice, that all these major hedge funds such as Ray Dalio's, which are invested into companies such as Alibaba, will not let their gains slip from their hands. There's just too much at stake here. So hopefully the Chinese government comes to their senses, and that means major returns for you investors. But with that being said, if you guys found some value in this video, please do give it a big thumbs up. That helps out tremendously with the YouTube AI. I'd also love to hear your thoughts on Chinese stocks, so please do comment below. What are your favorite stocks? What are your least favorite stocks? What do you think of the whole political situation? Do you think this is just noise and this is when we can get great opportunities? Or do you think there is something deeper behind this? I'd love to hear your thoughts, so please do comment below. If you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead, join the investing family, hit that subscribe button, turn that notification bell on. And if you want to take things a step further, if you want to level up your investing game, hit that first link in the description below for the VIP membership group, where you can get access to my buy and sell signals. So when I make my moves, you can make your moves. In addition to my entire investment portfolio, the stocks and the story of how I grew that portfolio from $20,000 to over $200,000. So more on that, first link in the description below. It's not some expensive course, it's actually the price of a coffee, and the amount of value you get is absolutely incredible. Don't believe me? Check it out. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.